You know that sinking feeling when you realize you've missed a deadline? Well, for thousands of Canadians, that feeling hits every single year around June 15th. And here's the thing, it doesn't have to. If you're scrambling right now, or even if you think you're fine, stick with me. Because there are strategies most people completely miss, and they could save you serious money on your tax bill. Hey, I'm Sarah Mitchell. And welcome back to True North Wealth, where we make Canadian personal finance actually make sense. Today we're talking RRSP deadlines, specifically the June 15th deadline, why it matters, who it applies to, and the key moves you should be making right now. Because contributing to your RRSP isn't just about retirement. It's one of the most powerful tax reduction tools available to Canadians, and most people are only using half of it. Let's fix that. Okay, first things first. Let's clear up some confusion, because I get this question all the time. Isn't the RRSP deadline in February? Yes. And no. The standard deadline for contributing to your RRSP and having it count toward the previous tax year is 60 days after December 31st, so usually around the end of February or early March. But June 15th is the filing deadline for self-employed Canadians and their spouses. So if you're a freelancer, contractor, small business owner, or you have a spouse who is this date is critical. Here's the catch though. Even if you have until June 15th to file, any taxes you owe were technically due by April 30th. So if you haven't contributed to your RRSP yet, you may have already missed the window to reduce what you owed. But, and this is important, contributing now still builds your room, reduces future taxes, and gets your money growing tax deferred. Don't let perfect be the enemy of good here. So how do you figure out how much you can actually contribute? Great news. The CRA does the math for you. Log into My CRA account online and look for your RRSP deduction limit. That number is your available contribution room. It's calculated as 18% of your previous year's earned income up to the annual maximum, which for 2024 was $33,810, plus any unused room you've been carrying forward from previous years. And that carry forward piece? That's where it gets interesting. Some Canadians have tens of thousands of dollars in unused rooms sitting there, untouched. If you got a raise, sold a property, or had a particularly good income year, this is the year to use it. Think about it this way. If you're in a 40% marginal tax bracket and you contribute $20,000, you could be looking at a refund of around $8,000. That's real money going back in your pocket instead of to the CRA. Now here's the strategy I want you to pay close attention to. The Spousal RRSP. This one is genuinely underused and it's a game changer for couples with unequal incomes. Here's how it works. If you earn more than your partner, you can contribute to an RRSP in their name. You still get the tax deduction on your return, the higher income return. But when the money is eventually withdrawn in retirement, it's taxed in your spouse's hands. If they're in a lower tax bracket at that point, your household pays less tax overall. It's completely legal, CRA-approved income splitting. One thing to watch, there's a 3-year attribution rule. If your spouse withdraws that money within 3 years of your last contribution, the income gets attributed back to you. So this is a long game strategy, but for couples planning ahead, genuinely one of the best tools available. And if cash is tight right now and you can't contribute a lump sum, consider setting up automatic monthly contributions. Even $200 a month adds up to $2,400 a year, and your future self will thank you. All right, let's bring it home. Here's what you need to walk away with today. One, know your deadline. June 15th matters if you're self-employed or married to someone who is. 2, check your contribution room in My CRA account right now, not later, now. 3, don't ignore your carry-forward room. It could represent a massive tax-saving opportunity you're sitting on. 4, if you have a spouse with a lower income, seriously look at the spousal RRSP strategy. And 5, if you can't contribute a big lump sum, start small and automate it. The best RRSP contribution is the one you actually make. If this video helped you, hit that subscribe button. We put out new Canadian personal finance content every single week. And drop a comment below. Are you self-employed? Are you using the spousal RRSP? I read every comment and I'd love to know where you're at. Let's make sure you're keeping more of your money this year. This video is for informational purposes only and does not constitute financial or tax advice. Consult a qualified financial advisor or tax professional for advice tailored to your personal situation.